Okay, so chapter 14, last chapter of the book for lessons. Okay, so again, just a reminder, chapter 15 and chapter 16 is another company file to practice everything that you learned from chapters 1 through 14. Okay, now chapter 14, what does it do? Chapter 14 allows you to make the necessary adjustments you need to do at year end. Okay, and what are these year end procedures? Well, things like wrapping up your books, closing up your books, backing up your file is going to be an example of what we can do in chapter 14. Okay? So if you're following along, please use adjustments 21. Okay? So what are these year-end procedures and so on and so forth? So one thing I'm going to be teaching you today is using a general journal entry. Now, this is going to be exclusively for accountants, okay? Because this does have a few background information that you need to know about accounting in order for you guys to be able to process a general journal entry, okay? The general journal entry uses the accounts and it uses the debit and credit system, okay? So if for any reason that I need to adjust certain accounts, I would have to do so by using a general journal entry. Now we've seen the word general journal entry before, right? In chapter 12, when we need to enter in all the account balances. Well, in this case, right, because we have to do the account balances, that's exactly what we're going to do. We have to enter in a general journal. Now, I did show you exactly where to do it, so today will be a little extra practice on how to use a general journal and what to use a general journal for. Now, here it gives you a list of what you can use a general journal for. It's usually to clean up some mistakes, but it's also to help you adjust specific accounts for year-end procedures, okay? So what are these mistakes or things that you have to fix? So in case you accidentally transfer information from one account to another, you can use a general journal entry to fix that. You can even use a general journal to even reorganize a transaction from a class to another class, okay? But mostly you would use it for things like year-end, like depreciation, okay? We'll talk about bad debt, right? Bad debt is where if we use the allowance method, we need to do an adjustment entry to transfer the amount from the allowance from doubtful accounts into bad debt expense, okay? Things like if I bought supplies, right? Because in my books, I have to represent that I use the supplies. I have to adjust accordingly, okay? And of course, any non-cash transactions. So again, those are things like depreciation. And then of course, to close out owner's equity. If you choose to be a sole proprietor, you do have to do a journal entry to properly close out owner's withdrawal and owner's equity. Okay? Question?
No, sorry.
All right, so then now let's go ahead and start making our general journal entry. So let's see from what the first example is going to be to adjust the entry. Okay. So once again, the only way to access it is to go to company on the menu bar, and then you have the option to make a general journal entry. Only one way. You don't have it on the home page, you don't have it anywhere else. Okay? Right? So here you go. Make general journal entry. Okay? Then you're going to get this window. So again, it is a very, very crucial that you do know how the general journal works, right? You're going to be using the double system entry, okay, which means you're going to take from one account, whether you either debit, and you're going to have an equal and opposite credit, okay? So you have to select two or more accounts, okay? So let's take a look what the first one is. We need to look at the date, okay? So in this case, we're going to be looking at, let's see, we're going to be looking at the journal date to be, I believe it was January 31st. Okay. January 31st. Oop, too far. January 31st. Okay. Usually for your journals, you can have some kind of whatchamacallit, some kind of sequence or some kind of to be able to keep track of it. Okay. So we usually do like 2021-1. Okay. Now here's the most important part that you need to know when creating your general journals. Okay. You need to designate some kind of account so you can find where these general journal transactions are. So what they recommend you to do is to create a bank account called general journals or journal entries, okay? So in this case, right, because what does a journal entry actually do? So we mentioned things like recategorizing, right? We mentioned things like non-cash transactions and closing out owner's withdrawal, right? But entering in account balances. So at the end of the day, every single journal entry that we entered in should have a zero balance because we're starting somewhere and we have at the end of the day, right, your debits equaling your total credits. So in this case, is there a value to my debit and credit system if I have an equal and opposite debit to an equal and opposite credit? Is there an actual plus or minus in this situation? No. So in this case, it's always going to remain zero. So in this case, right, because it's a non-cash transaction, we have to designate that as a bank account, okay? Now, if you forget to enter in your journal entries, you can always find it by hitting the previous button and then adding it back in there. But for most cases, if you don't, it is going to be under your, in your chart of accounts, all the way at the bottom under non-posting transactions, and then you'll find it there. But for this, they do say rule of thumb is create a bank account and call it journal entries. So as you can see here, I have my bank account called journal entries. And what it does here by me creating this a line right here is that means when I create my account, create my transaction, it's going to drop it into this account. Okay. So let's take a look at what I am going to be doing here. So in this case, we're going to be debiting utilities expense and we're going to be crediting rent expense. So in this case, debiting unit. Okay, so in this case, for when we journalize a transaction, right, we need to do it in proper order. But in this case, because the way that the QuickBooks is formatted, it actually doesn't matter whether you use your debit first or your credits first, okay? But in this case, when I taught you accounting, when we organize our thoughts and ideas, we generally use the rule of thumb where we must use our debits first and then use your credits last. But in this case, it doesn't matter as long as you have your debit and you have your credit, because this is, again, this is mechanical, right? It will recognize what you're trying to do without being proper about it. But in this case, I want to ensure that I do properly do this. Now, sometimes understanding whether a debit has to go first or a credit has to go first, or which account needs to be debited and which accounts need to be credited, can be difficult. So I do not blame you if you don't understand this. But the great thing about not being like an accountant and being able to use QuickBooks is the bonus there, where you don't necessarily need to know any of those rules or regulations to be able to use QuickBooks. So in this case, what I did here is I put too much money in my rent expense, because in this case, when I wrote my check out for rent expense, it included money that I'm supposed to pay for utilities. So if you understand it that way, meaning I put too much money in my rent expense, I need to take it out from my rent expense and drop it into my utilities, because again, I end up paying the entire rent expense bill, which included my utilities. So in this case, I'm recategorizing my expenses, so then I can properly say, well, this is my utilities for the month, this is my rent expense for the month. Okay, because usually rent expense is a solid number. It's usually a number that you agree on, and it usually stays the same unless stated otherwise. Your contract either expired or so on and so forth. But in this case, that's exactly what I want to do. Okay, I put too much money in my rent expense, so I need to adjust it and recategorize it, because some of it needs to go to my utilities. Now check this out. I'm going to go ahead and type in, okay, that I owe $25.62. Now, because the rule of thumb here is that I need to have my debits equal or match my credits. So if I accidentally fat finger this, right? So in this case, I'm going to credit it. What if I decided to accidentally put 28.52 or 62, right? What happens here? If I decide to move to another cell, it will automatically stop me and calculate this right here, saying, hey, you are at an uneven distribution, right? You have too less debit in your utilities expense, and you have a $28 credit. So in this case, it's giving me saying, well, that means you're missing $3 in another account that needs to be debited. So in this case, you just have to make sure that you do confirm which number is it. Is it 25 or 28, which you can always modify. But in this case, right, I made a typo. I fat fingered a number. So now it tells me this is the number that it's going to tell me. I have to put another account in there to put that extra $3 in there. So in this case, I'm going to refix this, and it's 25.62. So then now it will adjust it, saying now you have $3 credit. Well, I'm not going to have that in there. So then there you go. It should make this 3. It should make this 0. Okay. So in this case, your debit and credit system, all right, will not let you enter in the transaction if you do not have the following information, right? First rule is if your debits and credits do not match, it will not let you enter it in. So what is the memo that you are putting in there? So in this case, I'm going to recategorize expenses. Okay. What we're doing here is we're recategorizing expenses. Okay. Once everything looks good, okay, date looks good, the journal looks good, right? If for any reason you have all these zeros, don't worry about it. It's not going to affect the account just because they're zeros. What do zeros do? They do nothing. So once we've done that, then I'm going to go ahead and save and close. Okay. Now, again, where do I find my general journal entries? Well, instead of going to company file and clicking on make general journal entries and having to click the back button, if I made 10 journal entries, I'm going to have to search through it forever to find the one I'm looking for. In this case, because once again, we created that bank account, right, called journal entries, right? I double click on it, here it is, right? It gives it to me right here, and I'd be able to double click on it and make my changes if I have to, okay? All right. Let's see, what's this one? Okay. Here's one where I did the sample file did a lot, and so on and so forth. So that's the general journal entries there. Okay, any questions?
No.
Okay. All right. We'll talk about depreciation towards the middle section of this chapter. Okay, because you will be using a journal for that, but like I mentioned, for any reason that you need to adjust or do anything with a journal entry, you'd be able to do that by going through the company file. Okay, so that's that section there. The next section is going to be talking about a $0 entry or a $0 check. What is a $0 check? Okay, so in this case, what the book tells you is a $0 check essentially does the same thing where you're transferring from one account to another. But in this case, because what a $0 check can do is it can even go as far as using items, and we can recategorize the items, okay? Now, in a general journal entry, you can only do accounts. You cannot do items. So remember, accounts is dealing with your overall general company, right? All your assets, liabilities, equity, expense, and income, right? All of those are going to be things that you can recategorize for. Where items are strictly only dealing with the sales process, so your only main operations of income. So that's the difference between the two, okay? So let's go ahead and take a look at an example to recategorize an item. Now you can use both accounts and you can use both items. So that's what's really cool about using the $0 check. You're not just strictly only to items only, but you can use an account into items if necessary. Okay? So let's go ahead and do the example here. Now, how does a $0 check work? Straightforward, right? It's very simplified. The only difference is making changes to the top part. Okay, so in this case, I'm gonna use write a checks window, right? Straightforward, because in this case, right, the only difference I have to do when I click on write a checks is instead of actually going out for my actual checking account, I am going to use journal entries. And I'm gonna click OK. So once again, your number here is number 1. That's your check number. So if you remember, we did 2021-2. Okay, so that it will be my second entry that I put in here. Date is still going to be January 31st. Okay, now here is the rule of thumb. In this case, right, this amount right here also needs to stay 0 because we are writing a $0 check. So that's the one thing we need to keep aware of is that this needs to be 0 at the end of this check. Okay? So we're going to be putting this account to, once again, the journal entries account. Okay? So then now we're going to make it payable to, we're going to quick add inventory adjustment account. So in this case, we don't have an account or we don't have an actual vendor that's named this, but we're going to put inventory adjustment. Okay? An inventory adjustment account. And what I'm going to do is I'm going to quick add it and leave it as an other person. Okay? All right? Or in this case, other name. So it says right here, we don't have this person existing in your list. In this case, it's not a real person or a customer at all. So what I'm going to do is I'm going to quick add this, and it's going to be an other name. Okay? So in this case, this is just the account name that I'm using to transfer the information from one another. So recategorizing expenses to items, okay? So as you can see here, we have the expenses tab, which only allows you to enter in accounts, and we have your items tab, which allows you to enter in your items only. So in this case, right, what we're going to do is we're going to transfer from one expense to our items. So in this case, we're going to put in cost of goods sold. Okay, so in this case, where maybe we're going to be refurbishing an item. So we need to have a cost of goods sold. So cost of goods sold account. Okay, and it's going to be for the amount of negative $75. Okay, my memo here is to put in that we are going to be, okay, we're going to say that this memo is to put parts together to repair, okay? Parts to repair camera, okay? All right. Now, what are the items that I'm going to be adding in here? Well, in this case, right, I need to fix a camera. So in this case, what I'm going to do here is, so I put the expense of cost of goods sold for negative $75. So that means the item I'm going to put in is the camera SR, okay? Now it says I have the refurbished, that's the one I'm going to be using. I'm going to be using the refurbished item, okay? Or I'm going to be using the camera, okay? And then I'm going to put in the refurbished afterwards. So here you go. I got the camera, okay? I'm going to put refurbished, and we're going to do quantity 1. And what is the amount? So right now it's $450. Okay? We're going to add the refurbished camera in there. Okay? So, hold on. Camera SR7, SR31. Okay, yeah. I was right the first time. Okay, so this is what I do. I'm going to put this. Let's change this again. It's actually supposed to be camera. So we do the camera first. And then the second one is going to be the camera refurbished. Okay, so quantity is -1. Okay, because what we're going to do is we're going to subtract that refurbished, subtract that camera, and we're going to add it into our refurbished section here. Okay, so once we do that, we're going to add the SR camera refurbished, okay, quantity 1 for the $525. Because that's going to include the fixtures from the cost of goods sold into here, right? For $525. Okay? Right? $450 plus 75 is going to be. Now it says here no, don't save that, right? You don't want to save the pricing for it. So in this case, right, I have a refurbished camera, which I subtracted one of the cameras and I had $75 to repair it. Okay? And that's exactly what I'm going to do. So that's exactly what it says here. And look, my value still is 0. And that's the end goal here. Okay? And I'm going to say repair camera. Right? If you need to categorize it based on the class, you can if it's necessary for you. But in this case, I don't see a class on here, so see. So that's how we use the $0 check to be able to move from one item to another. Okay, that's what the primary goal is for the $0 check, is to use to recategorize from items, but you can intermix between items and accounts. The only difference is that general journals is strictly only accounts, okay? So everything looks good, and I'm save and close. Now, once again, how do I see that? Straightforward. I just go to my I have to go to my general journal entry, and it should be there, okay? For the $0 check right there. $0 check, okay? For the camera. All right? Any questions on how to use a $0 check?
No.
Yes.
Kindly show us again how to recheck.
How to recheck?
Yeah, the $0 check.
Like where it's located, or to redo the check?
No. Where to find it again, to recheck.
Okay, so in this case,
In the chart of accounts.
chart of accounts. We have journal entries because that's the account we selected, right? Instead of checking, I put it into journal entries. Right, that was the first thing.
If you double click on journal entries, it will show.
Right here, my check right here. Oh, there you go, my check right here.
Yeah, okay. Thank you.
All right, so that's a rule of thumb here. You write a check, but instead of writing it to somebody, or actually not writing it to the checking account, you're going to write it out to journal entries. Okay. And once again, your journal entries bank account should be 0 at all times. There should be no balance in there because it's only meant for $0 transactions. Okay, or in this case, we call it non-cash transactions. Okay. All right, any other questions there? Okay. All right, here's another concept that I think can possibly work for your company, is called bartering. What is bartering? In this case, if you have a service or you provide a service in exchange for another service, you can use bartering tactics to be able to pay for things without using actual money. Okay, so that means you can trade a service for a service. Okay, we call that bartering. Okay. Now again, I guess that's not necessary if it applies to everybody, but in this case, it is perfectly legal to say, hey, if you do me some service, I'll provide you some service, okay? Or instead of paying somebody for services, you say, I'll trade you with an equal opposite type of service. It may not be equal, but again, the idea is I can say, I'll trade you this service if you do me this service, okay? It is 100% legal. We call it bartering. Okay? So in this case, right, what we're going to be doing is we're going to be creating another $0 check to do for bartering tactics. So let's go ahead and do the example again. Okay? So I'm going to go to write checks, and I'm going to make sure when I'm here, the account that I'm going to be using once again is going to be the bank account for general journal entries. So here it is. Okay, so we should be in journal entries. Okay, because again, when you're bartering with this isn't an actual sales, right? You're trading a service for a service. So in this case, there should be no cash involved because you're trading a service for a service. So in this case, who am I going to be trading services with? In this case, you are going to be doing it for general journal entries for the 21st. Okay, and we're going to do it for Wong and Son. Okay, again, so it says right here 2021-3. Okay, and we're going to go ahead and put in what my services are and what is the trade-off point. So in this case, we are here. We're going to pay Mr. Wong. Okay, memo is going to be barter retouching services for headshots. Okay, barter services, I said retouching. Okay, so in this case, right, we can offer saying, hey, I'll do your retouching, okay, for you if you do headshots for your staff or something, okay, or for my staff or whatever it is, right? Or in this case, they're trying to look at using you to retouch the photos, okay, for instance, if they did the headshots for that company, okay. So instead of actually paying for it, right, we're going to be bartering or trading services. So in this case, that's what the memo says. And now I need to go ahead and put in my items that I'm going to be doing. So in this case, I have 2 retouching for items. Okay, so two hours of retouching. Okay. Let's see, description, quantity 2. Okay, so as you can see, it is for $100, and I'm going to say it all in place for a 1-hour indoor photo session, which in this case, right, is $95. Okay. Okay. So again, for let me see which one I have to do negative. Okay, so this case for 1 photo session, and we need to override this because right now that's not even, right? We got one that's 100 and one that's negative. So in this case, I'm going to change this to negative $100. So again, 1 times negative 100 is going to give me negative 100. And in this case, we don't save that. All right, the memo or the customer / job. In this case, you don't need to assign it unless you want to. But in this case, it's going to be for the San Jose location, both of them. And memos here, or description. So in this case, you're going to do, retouching services. And then for the indoor photo session, you're going to do company headshots, right? And we have San Jose location. So class. Well, it's okay. I want it to be here. San Jose location. San Jose location. There you go. So once everything looks good, right now, this is the same thing. It's a $0 check because I'm trading in. I will do 2 hours of retouching services for you if you go ahead. If you take photos of your company, right? I'll do the retouching photo services for you in trade of, instead of paying somebody for the services, right? We trade them in. We bartered and trade them in. Okay. So once that looks good, I can go ahead and save and close. So once again, how do I locate that? Under the journal entries. So for any reason that you have that type of business where you are networking, right, and you do have those kind of services that where you're able to equally trade a service for a service, you can keep track of it by creating a $0 check and barter it. Okay. Any questions there?
No.
Okay. All right. Next section is going to be editing, deleting, and avoiding transactions. As we all know, the number one rule here is never delete a transaction, okay? Voiding only zeroes them out, okay? But we already know what voiding does, right? It keeps the information still there. The only difference is it reverts it and turns it into zero, okay? Where deleting it will actually remove it permanently from the actual transaction. But to avoid all of that, you can just simply edit the information at any given time, especially if you are the admin. Now, if you give permission, if you remember in chapter 12, when I created users, if you allow users to edit information at any given time, then you don't have to necessarily have to hunch over their shoulder and watch everything that they do, right? And especially if they make a mistake and you say, no, you can't edit or delete any transactions, then they have to come up to you as the accountant and tell them to try to fix their mistake. So again, if you want to have a preventative measure, so then your employee isn't creating some kind of fraud, then that is going to be one of those examples where you can prevent those employees to change information, especially when it's in a closed accounting period. But that doesn't mean you can't do it. So again, you can void a transaction if it's necessary, and you can delete a transaction if it's necessary. But instead of doing any of those things, right, you're better off just editing the information without causing any problems. Okay, so if you need to fix it, then edit the information accordingly. Okay. So for example, okay, I'm going to go ahead and say, I'm going to click on an invoice, because the example that we have in the book is that what if you accidentally forget to add something to an invoice? Yes.
So, what is the purpose we need to um, write this one, and after this we put it zero? I just lost. Like, what is the reason we do it?
The previous one that we just did?
The what is called it? the general.
Okay,
Like
so
why we need to do it, like write it and bring it to zero, and after this we avoid it. I just lost.
why would no?
Journal.
We're not voiding that transaction at all.
Why we need to put it like, why we need to write it down to give it to another company, or this is for ourselves, our service?
Okay, so you're talking about the previous one I just did.
Yes.
That is when you trade services with another person, with another company. So you don't need to pay. You say, hey, I'll do this if you do this for me. That's the purpose of that.
The journal.
In this case, it's a $0 check.
Oh, okay. I understand now. Like zero check. Okay, why we do it? Why we don't do it like just I will do this, the surface you will do. Why we need to write that check?
Because the idea is you're not paying.
Like just to say, if any for any law or something they sue us, here is it. This is the check. We write it down, but we just offer them the like business or service, and they offer us like we trade the business. Correct?
Not trade the yes, trade services.
Okay.
It's
Like
100% legal. Now, if for any reason that they sue us, we could, if you have a contractual agreement, so that's why you could, if you're afraid of that, you could invoice each other and just not charge it. But in this case, that's exactly what I did. I have to keep track of that. I provided service, but I didn't accept any money for it because I bartered it.
like the reason we trade the surface. That's it. This is why we write this check.
Yes.
Okay, thank you.
Okay. So going back to editing, deleting, and voiding transactions, right? So again, avoid voiding transactions and avoid deleting transactions. Your best rule of thumb here is just to edit the information as much as possible because again, voiding will undo the transaction but leave all the information there. Deleting will completely wipe it out. Okay? Now, again, with those two rules of voiding and deleting transactions, you have to be very, very careful on what that transaction is. If that transaction is linked to a bunch of accounts, then you shouldn't be voiding or deleting that because it can cause holes in your transactions or your recording process. Okay, so again, for any reason that you are stuck, we do, obviously say try your best not to delete anything and try to edit the information unless you're at the point where the more that you edit the information it's not working or it's something for some reason it doesn't do anything, then go ahead and delete it and re-enter it in. Okay, but you want to make sure that your books are okay at the end of the day. Okay, because number one thing is if one transaction is linked to many accounts and you delete that, you need to make sure that those numbers are correct at the end of the day. Okay. So here, what I'm supposed to do is I go to my invoice and I'm supposed to click previous. Okay, so it says it should be invoice for Jerry Perez, which in this case there isn't. So that's the wrong one. Let me see. Invoice, previous one for 2025-106. Okay, that's correct. Okay, for February 28th. Okay, for Maria. Is this Maria Cruise branch opening? Okay, yes, it is. Okay, so in this case, what if I accidentally forgot to add in services and I accidentally click the enter button? Okay, So that's one of the reasons why a lot of mistakes can happen, is because I'll be too quick to enter information and I might accidentally press enter, because again, for QuickBooks, the enter key is your enemy, because the enter key, right, if you're so used to using Microsoft Excel, the enter key allows us to move from one cell to another cell. In this case, QuickBooks, enter means you're validating and you're done with the transaction. Okay? Tab is the key that you use to enter in to move from one column to another. So again, if I'm using the tab key, right, that's going to allow me to move from one box to another, right? Enter key is to be done with the transaction and save it. In this case, maybe I accidentally did this, or maybe Maria called me saying I want you to tack on this other service for me and send me a new invoice. For whatever reason that you have to edit the information, then go ahead and locate what it is, right? And go ahead and edit the information accordingly. So in this case, we need to add an outdoor photo session. Okay, she is requesting for 3 of them. Okay, for outdoor photo session. Okay, so outdoor photo session. Okay, and she wants 3 of them. Okay, once everything looks good, okay, I'm going to edit information. So thank you for your business. So we have 3 premium package and 3 outdoor photo sessions. So you can edit that information right there. And once everything looks good, right? Obviously, you can't send an invoice unless you haven't sent this out yet. If you modify it, then that's fine. But if you've already sent this invoice out, you do unfortunately have to create a new invoice in place of it. Now, you want to also be careful here, because now you need to go back to that previous invoice and void it, because once again, you have 2 invoices for the same customer. So you want to make sure that you do those things correctly, and for any instances that you do end up having this. So in that case, when you do this, just make sure that you do reissue another form in this case, okay? So in this case, because I'm editing something that I've already created, right, I can make changes to the date, I can make changes to the invoice number if I'd like. Okay? And once everything looks good, I'm going to go ahead and save and close, right? And then you're going to get this little pop-up window saying you made changes to this invoice or this transaction. Are you sure you want to save this? And you say yes, okay? So again, rule of thumb there is try your best to try to edit the information as much as you can. Voiding is next. To try to undo it, and deleting is going to be your last resort. Okay? All right. Any questions about editing, voiding, or deleting transactions?
No.
Yes.
Are we going to void the previous transaction next?
I mean, it's not really necessary to do, but if you would like to, it's not very difficult, right? So if I go ahead and let's see what it says, the book says here. You're going to void, you're gonna find a transaction menu and then void. So in this case, so if for any reason that you do need to look at an example to void a transaction, so let's say I'm just going to go ahead and go to that previous one right here. So if I go to this previous invoice, right? And let's say for some random reason, Maria says, no, cancel it. I don't want it anymore, right? We need to either void the transaction or delete it. Now, rule of thumb is because we said that we sold these services, it's going to affect multiple accounts. So in this case, what we're going to do is we're going to choose to void it. How do you void a transaction? You go up to the edit menu and you're able to void transaction. Okay? Straightforward. Okay? All right. So if I want to void it, I'm going to say void this transaction. So now that I voided it, I press enter, say you made changes to this. I say yes. So that means if I go ahead and look up this actual transaction, it's been voided. Okay. How do I know it's voided? Well, let's take a look. Okay. If I go to Maria Cruz branch opening, right, and I said that was what 106, right? Invoice number 106. Okay. If I double click on it, right, it tells me it's at zero balance, right? If I double click on it, it tells me that everything is zeroed out, okay, down at the bottom. This is what it means to be voided. It doesn't necessarily show that it says voided on it, but that's how your indicator is that you'll see a $0 here. And what it does is, again, undoes the transaction by zeroing it out. So in this case, I never sold to Maria Cruz the premium photo sessions or outdoor. So as you can see, it just zeroed out all the information. Okay. Now, again, you can do that by just modifying the transaction, like I've mentioned. If Maria doesn't want this anymore, then just put zero yourself, or you could just delete the transaction accordingly. Okay. But yeah, voiding is pretty straightforward. It's pretty easy. Yes, you are able to click on this and be able to edit the information. But remember, you have to be looking at the window to go to the edit and then void transaction. Okay. All right.
Got it.
Okay. Any other questions? Between editing, voiding, and deleting. Okay, rule of thumb is all transactions should never be deleted. Okay. Okay. However, there is one thing I can show you to do, and that is to be able to delete all your transactions but leave all of your information intact. This is for, okay, now if you notice this, right, all of this content that we see here is this entire file building since 2019. Now, right now we're currently in 2021. Is it safe to keep all this information piled up in this QuickBooks file? Yes, it's okay to do that. However, right, if you are limited, so remember, you are limited to only 14,500 number of items that you can have in a list. But because we have Premiere, right, we have up to 1,000,000, right? Now, not saying that this is it will benefit you in the long run or not, but for any reason that you have really old transactions, okay, is it necessary for you to keep in your books? Now, we'll talk about this when we actually close out our books, right? When we close out our books, so at the end of the accounting period, right, you are going to back up a copy of your transactions. And what you're going to do is, if you choose to, yes, you can continue on forth with the information you have. But if you want to, if for example, right, if you have a file and it's 10 years old because you just keep adding and adding and adding more information, once you reach up a point, if you have transactions that are 10 years ago, is that necessary to keep in your books? No. You already made a copy of it. So in this case, we can do what's called condensed data, which allows you to delete all of your transactions, but leave all the people, all your list, all your items, all your preferences intact. Okay, so that means all of your invoices, all of your bills, all of your transactions are going to be wiped away. They're going to be gone. Okay? So again, that is only necessary for again when because every time you add and keep adding to your file, the bigger and bigger it gets, right? So in order for you to keep it nice, short, and simple, and be able to transfer the information without having to take forever to load the file, then that is going to be one of those things you can do, and we call that a cleanup utility. Okay. So again, as long as you have a copy of it, which is a backup copy, how do I delete all my transactions while keeping my information intact? In this case, what you're going to do is it's called utilities. So again, it's a condensed utilities file. So in this case, we're going to go to File on the menu bar. We're going to go to Utilities. All right, and we have the very second to last option to condense data. So what this does, once again, it's going to save a copy of this data on your computer, right? While at the same time, once it's saved, then it's going to delete all the transactions but keep all the people, all the information, such as your items and stuff. All that information is all going to be intact. The only thing it's deleting is invoices, bills, purchase orders, writing a check, those kind of typical transactions that you entered in here. But everything's going to stay the same. So all the accounts will be there, but they're all going to be starting at 0. Okay? Now, yes.
Are we mandated by law to keep files for how many years for auditing purposes?
Yeah, and that's exactly what you're going to do. They do recommend you to do this first. And we'll talk about that when we reach the 10 steps that you need to do in order for you to close out your books. Obviously, you're going to make a backup copy before you delete everything, okay? And that's what it means when you said by IRS laws, right? You have to keep, I think, up to 10 years of data for auditing purposes. So what you're going to do is you're going to create a backup file, right? And you're going to close the accounting period. So that means no one can enter in here. And then you will go ahead and condense your data. Now, is it obligated for you to do that? Not necessarily, because again, you can always reopen up your backup at any given time because it's already got the saved work on there. Yes, you don't necessarily need to keep that information anymore because you already have a copy. Okay? So that's the purpose of using the condensed data because, again, if you're going to be keeping 10 years of information on one QuickBooks file, that means it's going to take forever for your QuickBooks file to load because it's pulling in all the information from 10 years ago and loading it into the file here. Is that productive in any means?
Of course not.
Exactly.
I would like to add another question.
Go ahead.
Uh, are we supposed to close the accounting period by the end of the year or fiscal year? And if we have unpaid accounts or bills that has to be carried over to the next accounting period, uh, will that affect our ledger?
Okay, so closing the accounting period, okay? Yes, they do say you should close it at the end of every year for tax purposes. Now, again, your question that you said, does it affect my bills that are unpaid? In this case, right, we talked about temporary accounts and permanent accounts. Temporary accounts are the only accounts that close out, which is your income and your expenses. Your permanent accounts, which is your assets, your liabilities, and your equity, never close out at a given accounting period. So no. The answer is, does it affect it? No, because of the reason that they're permanent accounts, right? If you tell me right now, I'm going to close out my bank account, what does that tell me?
zeroing the account.
Well, no. If I'm closing out my bank account, what does that tell me? Or what does that tell you? If I choose to say I'm going to close out my bank account, I'm going to go to the bank and close my bank account.
That's taking out the money from the bank.
I'm closing out my bank account. Not taking money out. I'm not withdrawing. I'm closing out my bank account.
Oh,
I'm no longer doing business. Right?
I
How
see.
how am I supposed to put in money into my bank account if it's closed? How am I supposed to be taking money out if my bank account is closed? So in this case, that's the reason why, because a bill is a liability. A bill will never close out because at the end of the day, you owe that person money. They're going to come after you no matter what. You can't close out a bank account, or you can't close out a loan unless you choose to file for bankruptcy, right? That's the only option you have there. But in this case, when you do close the accounting period, your assets, liabilities, and your equity accounts do not close out. And yes, you carry that amount over on into the next accounting period. So when you close out your accounting period, you do not delete your transactions. Okay? So that's the difference between closing it out and actually using the condensed data. Closing it out only allows you to lock the data. And we'll talk about that towards the end of this chapter. Because that's the
Okay.
section that's going to be very important that you need to know.
Thank you.
Mm-hmm.
Sorry, I'm so a novice here.
No, that's fine. That's fine. Okay, so that's the point there. So good. That's a good question. If you choose to close out your accounting period, no, the option to condense your data is optional. Okay. Now they do. I mean, I would recommend you to condense your data at the end of the year instead of every single month. But again, every accounting period can be different, right? I could say I want to close my book out to every week. I want to close it out every month, every quarter, right? That's fine, especially when you have a corporation as large as Walmart. Can you expect how many transactions they're gonna have to be entering every single day? It might be near impossible to have to close it out every day or every at the end of the week, just because the vast majority of how much transactions have to be entered in. So realistically, that's why they pay the big guys, right? We call the big four, which is the top four accounting firms, to process and enter all that information, to audit, to do tax, all for the purpose of those corporations, right? They work day in and day out on these corporations' books and so on and so forth. Okay? So a little tangent there. So in this case, is it necessary to condense your data? No. But it is recommended to try to do it because, again, it's not productive to have 10 years worth of data in one file. You can make a backup copy and then basically remove all your transactions. And you can actually, when you remove your transactions, you can set a date of when the last transaction you want to remove, okay? So it's not like it removes everything, including all the ones that I'm currently working on. No, you can create a parameter of what dates you want to delete the transactions up to, okay? So now we have that. Let's see if we're good on time, okay? Yeah, let's go over one more section, which is going to be memorized transactions, and then we'll go ahead and take a break, okay? So let's talk about memorized transactions. What does memorizing a transaction do? Now, in this case, right, we talked about having reoccurring transactions. So again, if you're going to be receiving the same exact bill every single month from a landlord, right? That's a perfect, or a cable company, right? You already know what your responsibility is. You know that you expect a bill to come exactly certain days and they're due on specific days, right? It's they're date driven bills. So if you know that, for example, right? Maybe my insurance, I have to pay every single first of the month this exact amount every single month. that is going to be a reoccurring transaction. And to help you save some time, you can memorize this transaction. So let's go ahead and enter in this first one right here where we are actually buying some insurance and they bill us the same bill every single month. So how do we actually do that? Well, first off, let's actually talk about creating the bill in the first place, okay? So let's create the bill first. So in this case, this is for Sinclair Insurance, okay? Again, date is going to be, I'm going to say the date was for January, let's see, memorized transaction. I want to say this was for January 1st, okay? So let's say I received the bill on the 1st and it's due on the 1st, it's due on, actually it says right here, it should be for the 15th. So again, I'm going to say I received the bill on the 15th and it's always going to be due at the end of the month. So here, 15th, okay? What is the reference number? Again, this number is going to always change every single time because when you receive a bill, that's the number you're putting in here, okay? So how much do I owe them? Again, it's going to be net 30. So in this case, what is the account that I am going to be linking this with? And it's going to be the insurance expense, and it's going to be for $600. So insurance expense, okay, and it is for the amount of $600. Now again, I'm going to be buying this insurance, so I'm going to call this monthly insurance for San Jose store, right? Okay, and I can copy this memo once again anywhere I need to put this. So in this case, I'm going to say this is my monthly insurance for my San Jose location. And again, I'm going to also designate it to San Jose location. Okay. Now, before you go ahead and save and close, let's say I'm going to be receiving or I'm expecting to receive a bill in February for the same exact amount for this exact bill here, right? So what I'm going to do here is at the very top of my window here, I have this button that says memorize, okay? So if I click on this memorize button, now the question is, what is this going to be named as? And I'm going to say monthly insurance for San Jose, okay? Now, how do I want this to be added into my memorized transactions? In this case, do I want it to set reminders? Do I want it to put it on a do not remind me? Or do I want it to have it automated? Automated means every time I open up this bill, it will fill in the information for me. And I want it to automate it. Now the question is, how often do you want to have it done? In this case, I want it done every single month. So let me see, twice a month. I want it done every month. Now, when is the next due date? Again, it's going to be on the 23rd, not today. Okay. I'm going to say February 15. All right. And then now it says number of reminders. Okay. So in this case, how many am I supposed to be receiving this? So in this case, well, I have 11 more that I should be receiving. And how many days in advance before I enter this in? None. I want this to be entered in pretty frequently, okay? Now again, this doesn't mean it's going to set reminders for you because I did not say I did not have it set to remind me. I have it set to automate it for me. So that's the difference between actually setting up a reminder. For any reason that you do want to set up a reminder saying, hey, you need to receive a bill, well, obviously you're going to get the bill in the mail. So you're going to automatically, assume that you're going to get reminded because you receive a bill every single month, right? Whether if it's paperless, then that's understandable, right? If it's paperless statements, then you have to go ahead and actually set reminders for that. But in this case, I'm making sure that this fills in the information for me. And I'm going to click OK. All right. So what happened is it saved a picture for me. Okay. And what I'm going to do here is I'm going to save and close. Okay. Now, let's say it is February and I need to enter in another bill for the Sinclair insurance. Where do I locate that? Well, in this case, you're going to go to list and you're going to click on memorized transactions. So as you can see, there it is, memorized transactions. Now, if I double click on it, it's going to create the bill for me for February 15 for $600. So it automatically filled in all the information I need. All I have to do is now put in the billing information or the billing number and click save and close. Okay? Now, okay, so that's one thing. Now, what if I need to make changes to this? Again, you can go ahead and right click and edit the information. So for any reason that you need to edit things like, I don't want it to automate, I only have 11 left, things like that, right? Then you go ahead and make those changes. But what if my insurance went up instead? What if it went $100 more? Then you can go, this is what you gotta do. What you're gonna do is you're going to edit the information saying, what if it's 700 this time? So I go ahead and change it, right? So right now it's March and I say it's now $700, okay? And now I'm gonna go ahead and click memorize once again, okay? And I'm gonna replace it. So then that means when I receive my, let me go ahead and cancel. When I save my, when I create my bill for March or for April, it's going to show me that now it's $700, okay, for April, okay? And I'm going to save and close, okay? Now, that is how you memorize a transaction. Now, can I go ahead and just enter in a bill and be able to do the same thing? In this case, no, you're not. And I'll show you an example. So again, let's say I received a bill from Sinclair once again. Okay, Sinclair. If I go ahead and do that, the only thing that's going to save here is, oh, you must be paying for some insurance. But the memo isn't there. The amount isn't there. The date is not going to be the same date because in this case, it took me to April 15. I already put in my April 15. Okay? So in this case, it will not automate it for you. Okay? It will only say, oh, it will only pick up information like, oh, you must be paying for insurance. But all the information that you had entered in here does not save. So the only thing that you can do here is you are going to, the only way that you're able to do it is to go through the list and go to memorize transaction. And all you have to do is double click on it and it will create the bill. So here, it created the bill for May, right? With all the information, all I have to do is just put in the billing information, right? Whatever the bill number is, and save and close. Okay? Any questions in regards to memorize transactions? Now, there are a few things that you can and cannot memorize. The only 3 things that you cannot ever memorize is a paycheck, okay? You cannot do a bill payment or a receive bills, okay? Can you memorize a regular check like you're just doing your monthly payments? Yes, you can. The only 3 that you cannot do is a bill payment, a receive checks, and a paycheck. Because again, can you predict that your hourly workers, are they going to show up to work every day? Can you expect that? Can you expect a customer to pay you exactly for what you want? No. You can always end up getting a partial payment. You can always end up getting, they don't pay at all, right? And third thing is can you expect yourself to make the payments, right? Yes, you can do, like, again, if you have a automated service where you do, what is it, auto bill pay? Yeah, that's fine. Yes, and that's one of the things you can do. You can memorize a check, but can you predict, for example, a credit card payment? Can you predict yourself that you're going to make an actual payment, like for that amount, right? Maybe you might be feeling, hey, I have extra money. Maybe I'll pay off my credit card today. But other times of the day, you might be, no, I can only write $50 or pay for the minimum, right? But what's the difference between a check and a bill payment? Well, a bill payment, a bill payment is when you're trying to pay a bill off. You can never predict that. But I can always constantly write a check out to this person every single time, right? I can memorize that. But I cannot memorize a bill payment. Okay? Any questions in memorization? Yes.
Can you enter depreciation like of a company asset, like company vehicle?
That's the next
Depreciation.
section.
Oh, that's the next section.
Yes,
Sorry
tracking
for-
fixed assets is the next section. So what I'm gonna do right now, it is 9:57. So I'm gonna round that to 10 o'clock, and let's take your 15-minute break. So please be back no later than 10:15, and we'll start talking about all that stuff. Okay?